Hello everyone, my name is Muhammad Saifullah bin Sapli alias Sapli, matrix number BB21110-850. Today, I'm going to talk about navigating organizational level challenges in providing audit assurance. Company Lakasundra World is a parent company based in India. The top management of Lakasundra Company asked the auditor from their subsidiary Lakasundra World Mine, which based in Malaysia, to perform audit assurance for the parent company. The auditor is very familiar with how to perform audit assurance in Malaysia, but when they perform the audit assurance in India, they encounter various challenges due to difference in regulatory frameworks, business practices, and cultural factors between the two countries. These are the challenges encountered by the auditor of the subsidiary company Lakasundra World Mine when perform audit assurance in India. First, transaction and transfer pricing. Second, operational challenges. Third, legal and regulatory differences. And the last one, cultural and language barrier. The first challenges is taxation and transfer pricing. In understanding the Indian tax law, auditors may face challenges in navigating the complexities of Indian tax law, including transfer pricing, regulation, which may differ significantly from Malaysian tax law. For example, India transfer pricing focus on provide for self-assessment, and Malaysia is based on Section 140A of the Malaysian Income Tax Act 1967 and Malaysia Transfer Pricing Rules 2023. For the second challenges is operational challenges. Logistical issues, which physical distance may result in logistical challenges, making it necessary to coordinate site visits, meeting, and information exchanges effectively. For the time zone difference, scheduling meeting and communication can be challenging due to significant time zone difference between Malaysia and India. For example, Malaysia is 2 hours ahead from the Indian time. The third challenges is legal and regulatory differences. First is company law and regulations. Auditors need to navigate the differences between the legal and regulation framework in Malaysia and India, including company law, accounting standards, and tax regulation. Second one is auditing reporting requirements. India may have specific reporting requirements that differ from those in Malaysia. An auditor must ensure compliance with Indian reporting standards instead of Malaysian accounting standards. The last challenges is cultural and language barrier. First is communication challenge. Language differences and variation in business culture can pose challenges in effective communication between auditors and their clients in India. Second one is understanding business practices. Cultural nuances in business practices may impact interpretation of audit requirements and expectation. So, how can the subsidiary auditors overcome the challenges? For the taxation and transfer pricing, first is tax expert involvement. Engage with tax experts familiar with both Malaysian and Indian tax law to navigate the complexities. The second one is collaborate with Indian tax authorities. Maintain tax authorities to ensure compliance. The second solution for the operational challenge is effective communication channel. Establish effective communication channels such as regular virtual meeting to address logistical challenges. And the second solution is flexible scheduling. Be flexible in scheduling to accommodate time zone differences to ensure timely coordination. For the legal and regulatory differences solution, first is thorough understanding. Invest time in a comprehensive understanding of Indian company laws, accounting standard, and tax regulation. Engage local experts. Collaborate with local professionals or firms in India who have deep understanding of the regulatory landscape. And the last one is cultural and language barrier solution. First is cultural sensitivity trainings. Provide cultural sensitivity training for audit teams to enhance cross-cultural communication. And the last one is language support. Use bilingual or multilingual professionals or employ translation service when necessary. The conclusion: throughout this presentation, I've shown you the 4 challenges encountered by the subsidiary auditors, which is first, transaction and transfer pricing. Second, operational challenges. The third one is legal and regulatory differences. And the last one is cultural and language barrier. And I also shown you how can the auditor overcome these challenges when performing audit assurance in India. That's all for me. Thank you very much.